Well, I'm Adam McCullough. I'm a passive strategist at Morningstar's ETF group. I'm here with Fei Li, the Director and Global Head of Research Affiliates Investment Management Group. We're here at the 30th Annual Morningstar Investor Conference. Thanks for joining us today, Fei.
Thank you for having me.
So later today, we have a panel about multi-factor funds, and I wanted to get a little bit into Research Affiliates' approach to multi-factor funds. So how do you think about how you construct a multi-factor fund, and what are some of the pros and cons of your firm's approach?
Of course. So we are trying to offer a multi-factor strategy which provide investors more sensible exposures to robust equity factors. We have done very extensive research on factor investing and also implementation. So hopefully we can help investors to achieve great investment outcome not only on paper but also with real life assets. I would just emphasize maybe a few features, I believe, how RAFI dynamic multi-factor approach differentiates itself from other providers' products.
Please, yeah, go ahead.
Yes. First of all, it is a multi-factor strategy which combines individual factor portfolios, which allow for very straightforward performance attribution, requires low governance cost from the investors.
So it's much more transparent.
Yes, it's very transparent. When they outperform or underperform, you know exactly which particular factor is contributing.
Gotcha.
In addition, our approach basically includes 5 factors, 5 underlying factors: value, momentum, low risk, quality, and size. Those are all the factors have very strong theoretical foundation and also empirically robust.
So all very well vetted in academic research and across geographies, across in-sample, out-of-sample data.
That's right. We choose factors to be included with very strong criteria. Yes.
Gotcha.
The third one, I would say our strategy actually offers pretty balanced factor exposures or loadings on factors towards those sources which we believe will provide long-term positive excess return.
The goal is to spread out your bets across multiple factors that over the long run have worked, but you may not necessarily know which one will work at a certain time.
That's correct. So we would like to have diversified bets across all the factors we would like to get hold of.
Great point. And so I know that your firm also has done some research on factor timing and maybe factor crowding. Do you want to talk a little bit about how your firm thinks about that and when is maybe a good time to take advantage of an overcrowded or undercrowded factor?
Absolutely. So that's a very important feature of our dynamic multi-factor strategy as well. We do believe this particular factor timing approach can help address the investors' concern about rising valuation and also crowdedness of certain individual factors. When they experience higher adoption rate over recent years. We are very strong, value investing believers.
Sure.
So we do think buy low and sell high makes sense, whether it's about individual securities or it's about factors. However, when you deal with the factor space, there is the dimensionality is very significantly reduced.
Right.
The total number of robust equity factor is a single digit. And when you deal with cross-sectional equity space, you do have thousands of securities to play with.
Right.
So the efficacy of timing in the factor space is a lot weaker than individual stock space.
Just because there's not as many advantages to take advantage of or any mispricings to take advantage of.
That's right. And any statistical significance of the advantage from timing has to require really long history because you don't have lots of cross-sectional observations.
Gotcha. So spread your factor bets and time carefully.
That's correct.
All right. Fei, thanks for joining me today. This is Fei Li, the Director and Head of the Investment Management Group at Research Affiliates. And I'm Adam McCullough here at the Morningstar Investor Conference. Thank you again, Fei.
Thank you so much, Adam.